Did you know that over 90% of investors lose money in the stock market? Yet, the top 1% of investors, like Warren Buffett, have built fortunes by doing the opposite of what everyone else is doing. They didn't take huge risks. Instead, they followed a simple rule: small, consistent habits. Most people think getting rich takes big moves, massive investments, or luck. But here's the truth: it's the little things, done consistently, that make the biggest difference over time. In fact, studies show that 72% of wealth-building success comes from habits, not from picking the right stocks or trying to time the market. In this video, I'll share the 6 tiny habits that made me rich. They're simple, easy to start, and can work for anyone, even if you're just getting started with investing. These habits are all about building long-term wealth without the stress, and you can start using them today. Curious? Keep watching to learn how to unlock the power of small habits that can change your financial future. Chapter 1. The Daily 10-Minute Stock Ritual in Value Investing. Time is on your side. The first habit is simple but powerful. Spend 10 minutes a day reviewing your portfolio. This isn't about obsessing over every stock's daily performance. It's about checking in with your long-term investments. Did anything change in the companies you own? Any updates from the CEOs? Maybe a new product is launching or a competitor is growing. The key is consistency. Spending just 10 minutes a day can lead to massive results over time. Warren Buffett himself has said, "The stock market is a device for transferring money from the impatient to the patient." By taking those 10 minutes each day, you're not just reacting, you're staying calm, informed, and ahead of the game. A study by Vanguard shows that investors who stay the course and avoid short-term distractions outperform those who jump in and out of the market. So, take a few minutes each day to review and stay grounded. The less you panic, the more your investments grow. Chapter 2. The Power of No, Cutting Out the Noise. We live in a world that never stops talking about the next hot stock or market crash. But the truth is, wealth doesn't come from chasing every shiny thing. The second habit is learning the power of no. Most people can't resist buying into trends or jumping on the latest market speculation. But as value investors, our best move is to filter out the noise. Instead of responding to every market newsflash, focus on what you know, the companies that align with your investing strategy. Buffett has famously said, "The stock market is designed to transfer money from the active to the patient." By saying no to distractions and sticking with your strategy, you'll do the opposite of the crowd. The results speak for themselves. Investors who tune out the noise and focus on the long term tend to perform much better. Chapter 3. The buy and forget mentality. This is where most people fail. They can't stop watching their stocks. But one of the smallest, most effective habits is the buy and forget mentality. When you buy a stock, don't constantly check its price. Trust your research. If you believe in the company's fundamentals, give it time to grow. Studies show that investors who trade less frequently have higher returns. Over the past 20 years, the S&P 500 has shown that holding on to a good stock for the long term consistently outperforms those who frequently buy and sell. This isn't to say you ignore your investments, but rather, it's about trusting the process. Time in the market is more important than timing the market, says Buffett. And that's exactly what this habit teaches. Patience is your friend. If you're finding these tips helpful, don't forget to hit that subscribe button so you won't miss the next part of this series. Chapter 4. Investing like a turtle. Slow and steady wins. You've heard it before. Slow and steady wins the race. But when it comes to value investing, this is absolutely true. The fourth habit is about making small, regular investments rather than betting big on one-time opportunities. By investing small amounts consistently over time, you take advantage of dollar-cost averaging. This strategy helps you avoid the stress of trying to time the market. Instead of putting all your money into one stock at a peak, you spread your investments across time and price fluctuations. Historical data shows that people who consistently invest small amounts, like $200 a month, can build a significant portfolio. Over 40 years, this strategy can turn a small investment into millions. Patience and consistency, rather than speed, will build your wealth. Chapter 5. The 3-minute morning mindset. Before the market opens, take just 3 minutes for yourself. This tiny habit sets you up for success by giving your day purpose. It might sound silly, but creating a brief morning routine can make a big difference in how you make decisions throughout the day. This habit might include reviewing your investment goals, quickly scanning any news updates, or even just mentally preparing to ignore the market noise. Research shows that successful investors often have rituals that help them clear their minds. Bill Gates, for instance, is known for taking time each morning to focus and prepare himself before diving into the market. By setting a clear, calm mindset, you'll be ready for any stock market drama that comes your way. It helps you focus on long-term objectives rather than short-term fluctuations. Enjoying these insights so far? Be sure to subscribe for more value investing tips and strategies. Chapter 6. Networking with the underdogs. The final habit might surprise you. It's all about networking with the underdogs. Instead of focusing on well-known, large-cap stocks, try finding hidden gems in the small-cap space. These often overlooked companies can offer huge returns if you know where to look. Networking is a powerful tool. By connecting with other value investors and experts, you can find opportunities that others miss. These might be small companies in their early stages, offering products or services that could explode in the future. Think about companies like Apple or Amazon before they became household names. In the early days, they were just small startups with big potential. Studies show that value investors who pay attention to small, undervalued stocks often outperform those who focus solely on large companies. If you've enjoyed this video and learned something new, don't forget to hit that subscribe button for more wealth-building strategies. Final thoughts. The richest investors didn't get there by making one big bet. They got there by building small habits that added up over time. The key to wealth isn't in chasing the latest trends, it's in consistently doing the right things and trusting your process. By starting with these 6 tiny habits, you'll be on your way to becoming a value investing pro. Keep it simple, stay patient, and watch your wealth grow. Remember, as Warren Buffett says, the best investment you can make is in yourself. So invest in your habits, and the returns will follow.